The issue that you sometimes have, or used to have, with pricing particularly tax returns was that if you use a fixed fee, then those clients that have more complicated affairs are getting it cheaper.
Yeah.
And those that have simple affairs, you're probably overpricing, and eventually they will leave, and you just get left with a load of clients that you're doing lots of work for on a fixed fee.
Yeah.
The alternative is to consider time. Start keeping timesheets for how long it takes you to prepare a return. But of course, from the client's perspective, that's really not very valuable because it could be that somebody doesn't know how to particularly do something in a tax return, and therefore it takes them ages and they get charged for it. And nobody wants to keep timesheets in a progressive firm now anyway. So what we did was we went set about the methodology of taking the way that we request information from a client for their tax return and putting that into a series of options which we've got to include in the price of doing their return.
Yeah.
So whereas we might say to a client, do you have any dividend income, or do you have any interest you receive on a bank account, or do you have a self-employment or an employment, those are now separate questions that when they're answered yes, actually add on to the cost of us producing the tax return.